So welcome to Lesson 3 of the Introduction to Actuarial Science. We're very lucky here to have an ANU graduate, Taleitha O'Meara, here to speak with us. Thank you for joining us today, Taleitha.
You're welcome.
Now, what I'd like to ask you first is, being the youngest person that we're going to have here, you probably remember the answer to this question more than most people. What caused you to pick actuarial studies, as it's called here at ANU, as an option for a university course?
Yeah, so to be honest, I had never heard of it when I was in high school, but I loved maths, and my maths teacher actually suggested that I study to be an actuary, and I had no idea what I was getting myself into at that stage.
That's really interesting, because I think I hear that story a lot from my students, and that's actually one of the reasons we've designed this course, is to give people an outlet to go, oh, I'm interested in actuarial studies. What is it?
Yep.
Well, okay, you've got a little 7-week course that you can do to teach you a bit before you make that decision. So, Taleitha, can you tell us a bit about what's involved in becoming an actuary after you finished your actuarial degree?
Yeah, so once you graduate from actuarial studies, you've still got some more study to do after that before you can actually qualify. So there's a number of exams that you have to do while you're working, and it's obviously you're learning on the job as well as studying, which can be quite difficult at times, but I think, it's obviously gets you to where you are at the end.
Does it help, though, what you're doing at work? Does that help you with the study as well, because you're combining the two together?
Yeah, definitely. So it depends what you're studying, because there's a number of different courses that you can do. So if you're studying a subject that's actually related to what you're doing and in the industry you're working in, then that's obviously helps quite a bit.
Okay, fantastic. Now, can you tell us a little bit about your work history since you've graduated? What sort of actuarial work have you been involved in?
So I started off in actuarial consulting after I graduated, and I was mainly working with life insurance and financial services companies. The focus of what I was doing was basically helping them to improve their overall approach to risk and capital management, and a lot of this was in response to Australian regulatory change. At the moment, I'm actually working in a group risk team, and one of the main things I do is manage processes to quantify the overall risk exposures to financial, insurance and operational risk.
And can you explain what group risk is?
Yeah, so a lot of companies, they're basically conglomerates, so they've got lots of different types of businesses in it. So they might have life insurance, they might have a general insurance unit, they might have a funds management unit. So from my perspective, I actually get to look at each of the different industries and how they interact with each other and how those risks aggregate from those bits up to the whole.
Okay, so it's about sort of looking at interaction effects and how one risk affects another, and not just looking at things in isolation.
Yeah. So there might actually be, depending on how the businesses interact, there might be offsetting effects and diversification across different parts. Okay.
And knowing what you know now, having been qualified for a little while, what do you value most about being an actuary?
So I think doing an actuarial program provides you a very broad skill set and a general approach to problem solving that you can apply to any industry. So for me, one of the most valuable things is the potential to end up working in any type of industry.
Fantastic. In the first 2 lessons for this course, we've looked at cash flow models on a completely certain basis. All of the cash flows have been known up front. There's been no uncertainty in those cash flows. So, for example, in the annuity certain example we looked at in lesson 2, everything was known about that policy. We knew exactly how long it was going to last for, what the cash flows were going to be, and there was no possibility for those cash flows to differ in any way. Now, actuaries don't really deal with certainty that often, and in fact, actuaries are much more interested in uncertainty and how to manage that uncertainty and how to model and quantify that uncertainty. So what we're going to do in this particular lesson is start thinking about uncertainty in cash flows. And so, Taleitha, I'd like to ask you, can you give us an example of some uncertainties you deal with in the cash flows that you deal with in your job?
Yeah, definitely. So one of the main things I do in my role at the moment is look at the sensitivity of profit to different factors. So from an insurance perspective, lapse and claims rates are one of the key things that drive how these go up and down, and also setting your future assumptions around how they're going to move.
So can you explain what lapse is for those who aren't familiar with that term?
Yeah, sure. So lapse rates are basically when a policyholder drops their drops their policy. So for whatever reason they choose to not pay for that cover anymore, they basically cease the contract by not paying premiums.
Okay, and what other sorts of uncertainty do you have to deal with?
So interest rates are also another key thing that affect the profit sensitivities, so both from the perspective of how assets are invested, but also in terms of how you value future claim liabilities.
In this lesson, we're going to look at non-financial factors that affect the certainty in cash flows. In particular, the topic for this lesson is called analysis of state transitions, which Taleitha is about to introduce us to. We'll look at uncertainty in financial factors such as interest rates from lesson 5 onwards. But Taleitha, I'd just like to ask you one more question. Can you give us an example of a situation in your line of work where some form of non-financial assumption has not ended up being the way that you expected it to be, and what effect that had on the profit, for example, that you were dealing with?
Yeah, sure. So going down the claims path, some of the products that I work with are income protection products. So obviously one of the things that affect the payments that you're making in terms of claims is when people go on claim, but also how long they stay on claim. So trying to determine how long those people are going to be receiving regular payments from an insurer is one thing that's really difficult and challenging to estimate.
Taleitha is now going to talk us through what analysis of state transitions are, and we're lucky to have her here because her work involves looking at the exact sorts of things that we're going to be talking about in this week. So now I'll pass over to Taleitha to tell us about analysis of state transitions.